For any business, whether it's a huge corporation or a tiny corner shop, tracking the money is one of the biggest challenges. Think about it. Every single day, there's this flurry of activity sales, purchases, payments. Money is constantly moving. So, how on earth do they keep it all straight? Well, the secret isn't some kind of magic. It's actually a really clever system. Let's dive in and see exactly how it works. The answer? A system, a really meticulous, step-by-step process that creates this clear, verifiable path for every single dollar that comes in or goes out. And this isn't about some boring old rules, not at all. It's about creating order from what could very easily become total financial chaos. You could almost think of it like a detective story, where we're going to follow the clues to find the real truth about a company's financial health. And, of course, every good detective story starts with that first piece of evidence. In the world of accounting, that very first clue is what we call a source document. Okay, so what is a source document? Think of it as the fingerprint of a financial event. It's the original, undeniable proof. Like an invoice, a receipt, or a bank slip that a transaction actually happened. This right here is the foundation that the entire paper trail is built on. Now, here's something that trips a lot of people up, but this slide clears it up perfectly. An invoice that's sent before a payment is made. It's basically saying, hey, you owe me this much. A receipt, on the other hand, that's given after you've paid. It's the proof that says, all good, you've paid me. So one is asking the question, and the other is the answer. Simple as that. So why all the fuss about these pieces of paper? Well, they're not just paper. They're the absolute bedrock of financial integrity. They provide the hard evidence for auditors, they help guard against fraud, and they build this verifiable trail that anyone can follow. They're kind of a big deal. All right, once we have our clues, all our source documents, we need a place to log them, right? This is where our detective starts building the case file, or in accounting terms, this is where the journal comes in. The book of original entry, also called a journal or a daybook, is exactly what it sounds like. It is the very first place a transaction gets officially written down in the accounting system. It's like a financial diary for the business, logging every single event, sales, purchases, payments, in the exact order that they happened. And this is a perfect example of how it works. Just take a look at this sales day book for Baba Olu Enterprises. See how the key details from each sales invoice, the date, who the customer was, the invoice number, and the amount are all entered so neatly one after the other? It's simple, it's organized, and it's all in order. So now we have our clues, the source documents, and our case file, the journal. Let's see how they work together by following one single transaction's journey from the very beginning to the very end. It's just a beautifully logical flow, isn't it? From the event itself, to the proof, to the chronological record. But a diary isn't quite enough. To really understand the whole story, all this information needs to be organized. And that brings us to our final, key component. And that component is the ledger. If the journal is the daily diary, then the ledger is like the organized encyclopedia. It takes all those entries from the daybooks and sorts them into specific accounts. One for each customer, one for cash, one for sales, you name it. This is where we go from just a list of events to a truly structured overview of the business. Now, this entire system is held together by one golden rule, and you see it right here. It's called double entry bookkeeping. It means that for every single transaction, the books have to balance. Something is received, that's a debit, and something is given, that's a credit. This super simple principle is what ensures accuracy, and it's really the mathematical heartbeat of all modern accounting. So we've followed the clues, we've logged the evidence, and we've organized the case file. But why? Why go through all this trouble? What's the final verdict here? The verdict, the big payoff, is clarity. This meticulous paper trail is what lets a business create those official financial statements that prove its health to banks and investors. It's what gives managers the reliable data they need to make smart decisions about the future. And, maybe most importantly, it's how a business knows for sure if it's actually making a profit or a loss. So the one thing to really take away from all this is that what starts as this huge, messy mountain of individual receipts and invoices gets systematically transformed. The paper trail turns the potential chaos of daily business into the clear, actionable intelligence a company needs to survive and to thrive. And that leaves us with one final question for our modern world. With things like contactless payments and online invoicing, Has this paper trail actually disappeared, or has it just evolved, with digital files and data entries now acting as the modern-day source documents and ledgers? Definitely something to think about.